You're the owner of a small business, which means you're also the tech guy, and HR, and personal assistant, and head honcho, and intern. You could use another pair of hands, like the experts you'll find at Verizon Small Business Days, April 21st through 27th. Get a free tech check, special deals, and more. Call 1-800-483-4428 or visit verizon.com/smallbusiness to book your appointment. Verizon Business.
Reality radio for a really great future. We're talking real money.
To say I am tired would be an incredible understatement. I have just finished an entire day at Retire Meet, the virtual event we just completed minutes ago. And I have to say it was a success. I thought it was pretty good. A couple of technical glitches, but this was the first time we ever tried to do an event for which more than 1,000 people signed up, and do it with people in all these diverse places and do it all over the world. All over the world. So it came out pretty darn well. We learned a couple things, but all in all, it's a great event. Thank you all who participated, because I told many of you, no matter where you are, to listen to Talking Real Money on Como. However you can figure out how to do it. Yeah, I'm sure you can figure something out. There's an internet. It's amazing. And today I will be, Tom is still at the office. I will be taking your calls at 855-935-TALK, 855-935-8255. So if you're some of the folks who ask questions, because we had at the end like 100 questions, we could have literally stayed another 24 hours to answer all the questions. If you had a question that did not get answered during Retire Meet and you need to get it answered, well, here's what you do. Call me, 855-935-TALK, 855, I'm going to get the levels right, 855-935, wonder which one does which, 935-TALK. Do I sound okay in the studio? I just want to make sure. I'm sounding a little weird. Oh, I did? Okay, I'll bring myself back up. Oh, there we go. All right. Oh, that sounds better anyway. So, before we get started on calls, because I know we're going to get some at 855-935-8255, and we're live, if you're listening. We're live if you're listening on Saturday at 4 p.m. Eastern, a little after 4, or 1 Pacific time. There was a great piece. I really loved it. It was in Morningstar. Thank you, Tom, for sharing it with me, because I missed it. It was a piece written a couple of days ago by John Reckenthaler, who is a columnist for Morningstar. And here's how the column started. Ready? Oh, it's so much fun. He says, quote, a reader writes, I would like your take on a trendy financial product that has received relatively low attention from Morningstar authors. What do you think about indexed annuities? It makes me happy to see somebody else taking indexed annuities down. And John really wrote a great piece. You should go check it out at Morningstar.com. It's really good. If you're one of those folks sitting around going, oh, should I get into an indexed annuity? They're promising me the return of the stock market with none of the risk. Read this piece. He says, I love this line. He said, if you've seen one index mutual fund, you've seen them all. Every index fund is similarly structured. In contrast, if you've seen one indexed annuity, you have seen one indexed annuity. Every one of them is different. They have different indexes they follow. Some of them are just like made out of whole cloth. They have different participation rates. That's how much of the return, actually only the growth of the index you get. It varies. Oh, and then they have different rate caps. You get like 80% of the growth of the index up to blank, and that's all. You can't get anything above that. And then they have margin fees and permissible annual losses and all of this other stuff. But the biggest problem he sees with them is the same one we see with them. Opacity. cost opacity, investment opacity, the fact that you really can't research them one against another because everybody builds a different one, the fact that the commissions and fees are not disclosed, you can't compare them. And yet the people who sell them, they have a huge incentive to sell them to you. Huge incentive. Because the commissions can exceed 8%. And that's got to be paid by someone. And while the person selling it to you will lie through their teeth and tell you the insurance company is paying it, where does the insurance company get the money to pay that? You know who. You know from where, from whom. It's from you. You're paying it. And yet you have no idea what you're paying. And the reality of these things is they have never lived up to the hype. Never lived up to the hype. They're complex, confusing, and they're good for the person selling them. Does that sound like something that's good for you? So go read that article. It's really good. And avoid indexed annuities no matter what the liars say. 855-935-TALK is our phone number, 855-935-8255. Call right now. We got lines open.
Tom and Don are talking real money.
Is your portfolio a mess? You may have a case of hodgepodgeitis, but don't worry, we can help. Just set up a free, no-obligation meeting with a Vestory advisor at Vestory.com. No sales pitch, guaranteed. That's Vestory.com.
For your real life and real future, Tom and Don are talking real money.
Hey, welcome back to the show. I'm Don. I don't know where Tom is. 855-935-TALK is our phone number, 855-935-8255. So give us a call anytime, 24 hours a day. But if you call now during the show, well, I can answer your question live. And Tom's just not here. I don't know. He's late or something. I don't know where he's hiding. He gets too involved in stuff, then he misses the show. I don't know what he's doing.
Okay.
Oh, wait. I think I hear him in the background. Wait. Where are you, Tom?
Me? Is that what we're doing?
Tom,
Yeah.
what? Me
Yes.
mock you?
Yeah, I know. I had it coming all day. 2 bad jokes, and in 5 hours. It's usually well below my average, but I think I did okay anyway. So.
Yeah, you did okay. David Booth liked you.
Hey, if this was your idea 7 years ago, give you full credit or blame. And in this case, you deserve full credit. And it was another great day. I think at the peak, we had somewhere around 800 or 900 people on board watching and participating in all this. Ton of questions, a lot of great feedback. Just got another one here. People writing us saying thank you. They really appreciate how we did all this. We get a great response from people that want retire map help. That was all your idea too. So if we were in person, I'd be giving you a big hug right now. But I'll give you a virtual hug and tell you very well done. I also want to thank all of our great people. I mean, Barb was here, Ricky was here. Eric Payne came to town to help us. All the staff was there to help people. We got through, I got to say, we got through most of the day with minimal technical, impacts or problems. It's pretty good.
Minimal. Yeah, it was a learning curve for the attendees. I had to keep going back on and explaining how the breakouts went. And I want to apologize again to the consumer man, Herb Weisbaum, for interrupting his presentation when I was trying to herd cats into some of the other places. But otherwise, it went really well. So thank you all for helping.
Good. So kudos to you. And I don't want to belabor it, but we'll do this again. I know you prefer to do it all, virtual because you hide in your little cave there and it works for you. But I like seeing people, so we're going to do something in person here, hopefully at some point.
Okay, get everybody vaccinated. Go get busy. Go.
Good, indeed. Yep. Have a good one.
Right. Did we have any good questions that I need to answer while you're there?
Yeah, I do. There's one just wrote us that I have an old Sarcep, slightly less than 50,000 in it. I'm not working anymore. At one point, I was advised to transfer my money to a Vanguard account. Is that still the best move on my part?
Well, you know the answer to that. Yeah, it's probably a yes, and it's probably just moving into an IRA because you're not contributing to the Sarcep anymore.
And by the way, because I think she said, she's 55. You could move it in an IRA, and you could just buy the Vanguard Balanced Index Fund to get on with your life.
Or as Paul
Merriman.
Yeah, I was going to say.
Pushing. I know.
Paul Merriman was pushing those target date funds.
Yeah, we're going to have to look at that before we renew his contract. So
and pushing some guy reading his book.
Yeah, he loved your read on the book. What did he say? He said you added something to the book, or you did something to the book. I can't remember. But it was positive.
Well, it's because I rewrote the whole thing. He doesn't know. He probably didn't listen to it.
Now it's all about when to buy GameStop and when to buy
AMC. Yep, that's what it is. It's all about market timing.
Well, hey, listen,
thanks,
my friend, you did a heck of a job today. It was good. I got to run because life returns to normal. Got to go to the grocery store now. I'll get back to all the regular stuff. So hang in there, do the show, and it'll be great, and we'll be back together next Saturday.
Yes, we will. We will have the dynamic duo of financial talk radio back here for you next weekend. But for now, it's just the simple single. That's me, Don McDonald. 855-935-TALK is our phone number. 855-935-8255. And I'm kidding about the timing thing. We don't believe in market timing. As a matter of fact, speaking of great articles, another winner from Jason Zweig. What was the name of the piece? Why Your Wild Trading Ideas Feel So Right. Well, let me tell you something. They may feel right, but they're probably really, really wrong. We all fool ourselves. And I love the article because it's about behavioral finance. It's about the way our brains work. And really what he's getting at, and what we all need to get at, is this fact that as human beings, we have learned to detect patterns, and it's for our safety. We would see certain things in our environment that would lead us to believe that we were in danger. Changes in the sky, warning us about the weather. Changes in the way the birds flew out of trees, warning us of a predator. So we see all these things over and over again, and we develop this fight or flight thing, and we're doing the same thing with stock markets. But the problem is, it's not as simple as scaring off a bunch of birds, because the stock market or any other securities market is made up of millions and millions of individuals all doing their own thing with their own minds, and there are no patterns. There is no charting. There is no predicting. There is no power to your gut feeling, because it leads you to do stupid things. You know, your gut feeling can really get you in trouble. So avoid your gut. Rely on science. 855-935-TALK is our phone number. Hey, Gail, welcome to Talking Real Money.
Hello, how are you?
Hi, Gail. I'm good, thank you.
Good.
What's up?
Well, I am wondering if I should make a large withdrawal from my 401k versus taking money for a mortgage.
Oh, my. Tell me more. You're getting a new house or something?
Yes, we are trying to move back to California.
Okay.
I don't know if you know the market there. It's nuts.
Yeah, I do.
And
it's nuts.
Even a condo is going to cost us $800,000 to $900,000 potentially. We can comfortably come up with $600,000. I just want to know what I should do for the shortfall.
This is easy. This is way, way, way easy. Given today's rates, you would be foolish not to take out a mortgage.
Even at our age, we're in our late 60s, early 70s.
Yes, ma'am. Yes, ma'am. Because here's what happens. If you take that $600,000 or $700,000, or you take money out of your 401k, even worse, and you put that inside a house, it becomes very difficult to access in case of emergency. And if it's properly invested, and I don't mean anything crazy, I mean a portfolio that's 20 or 30% stocks and the rest boring bonds, it should, based on historical information, it should outperform the 2.5% or 3%, and I can't believe it'd even be 3%, you'll pay on the mortgage. So you'll be more than likely making more money on your money than you're paying on your money. With mortgage rates this low, I do not believe in owning a house free and clear, particularly if it means dipping into your retirement funds. I think that's a huge mistake because you got to pay taxes on that, and then it's gone for you to live on in the future or for emergencies. Thanks for the call.
Tom and Don are talking real money.
Set your course for a great future with a free copy of our 60-page Better Retirement Guidebook at vestory.com, vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
While I believe in being out of debt, I don't believe in owning a house free and clear unless you just have more money than you know what to do with, and it doesn't sound like that was the case for Gail. You've got to keep some of your powder dry and available to you. If it's tied up in the house, let's say, argument's sake, the California real estate market collapses. You want all your money tied up in your house? I know I wouldn't. And it can happen. Anybody who believes it can't happen is foolish. Real estate is not, historically, it has not historically been a great investment. Oh, yeah, if you're in the right place, it has been, but that's like anything. If you look at real estate prices across the country, I'm not talking about in Seattle or in California, you'll see that over 100 years, they've barely beaten inflation. That's not a great return on your capital. I think it's important to own a house if you can afford it. I think these days it's because interest rates are so low. Financially, it's better than renting. It really is. I've run numbers for a lot of people, and it's almost in every case. I can't think of a single one where they weren't better off buying than renting. 855-935-TALK is our phone number, 855-935-8255. Yes, and I know you Dave fans, you're going to say, well, Dave says you're not all debt. You got to get out of you don't want to have any debt anymore. I disagree with him vehemently. Having liquidity, I mean, unless you're a multi-millionaire, having that liquidity is more valuable than being totally debt-free. Yeah, if you got credit card debt, done. If you have a 6 or 7% car loan, done, out of here. House, different story. In fact, one of the questions that we didn't get to during Retire Meet was somebody said, what do you think of Dave Ramsey's investing advice? And since I mentioned Dave, I think that paying off a house is a little misguided, but I think that his investing advice is beyond terrible. I think it may be some of the worst available anywhere because he doesn't mention no-load funds. He doesn't believe fees matter. He continues to tell people in this day and age that a 12% return is a reasonable expectation going forward. Yeah, I can find a couple of mutual funds that anecdotally did that well in the past, but it doesn't mean they're going to keep doing it. So, there are limits to all advice. All advice. 855-935-TALK. Give us a call. Tim, or give me a call. Tim, welcome to Talking Real Money.
Hi. I just had a follow-up question to what you were commenting about, paying off the house in full.
Sure.
And my situation is if we keep going at the rate we're going right now, we will have our house paid off in about 2.5 years. Mm-hmm. And I'm 60. And I guess the question is, we're in a 4.5% interest rate. We've never refinanced because we're towards the end of the loan. And so would that still be the wrong choice to make if we have cash sitting around and we're pretty well set, in the 401k and pension and all that?
Here are some of the important questions you need to ask yourself. One, what is it that you want what you say you've got cash sitting around? What do you need that money for in the future? To live on?
Well, no. So, I bought it new, and it's about 20 years old, and the neighborhood is going through this right now, and I'm sure I'm going to be following shortly along of getting a new roof. So I'm going to need money for that.
Right.
And so
now, is this house
Go ahead.
Is this a house you plan to stay in for a very long time?
I'd like to stay here until I was 70 or 75. So another 10 to 15 years, yeah.
Okay. But it's probably not where you're going to spend the latter part of your retirement.
I would think not, no.
Then the advantages to having it paid back are merely psychological. Have it paid off. Merely psychological. There's no advantage to paying it off financially, particularly if you were to refinance what is left at 3% or less. So I wouldn't rush it at all. I would slow down, and I would start investing that money or putting it aside for some things you need, like the new roof. But I wouldn't push it because you don't want to tie up all that money in the house.
Tom and Don are talking real money.
Tom and I created Vestory to help everyone become a better investor, even those who will never be clients. Let one of our advisors help you start your financial plan or solve a money problem free with no obligation or high-pressure sales pitch at Vestory.com. Vestory.com.
Reality radio for a really great future. We're talking real money.
Yes, we are on this Saturday where I'm live on Como, and then this will be a podcast during the week. I'm Don McDonald. Tom Cock is heading home from Retire Meet, where we spent the whole day educating people from literally around the world. We had attendees from Singapore, from South Africa, from Norway, from everywhere. 855-935-TALK is our phone number. Yeah, of course, most of the people were from the United States. And it was very enlightening. It was great to get to talk with David Booth from Dimensional Funds. And our goal, this is our goal, when we've checked all the videos, because we have 4 different video feeds because we had 4 different tracks. When we get all that checked out, we're going to try and build some video presentation of this and put that up at retiremeet.com. So in a couple of weeks, it's not going to happen right away, but it will happen eventually. In a couple of weeks, we hope to have a video up there of most of the event, the best of the event, and that'll be at retiremeet.com. So you can still go to retiremeet.com. There's still information on the classes. There's downloadable materials. There's a lot of cool stuff there. So go visit and give me a call. 855-935-TALK, 855-935-8255. I don't like talking about it, but I have to. I have to really quickly. I'm going to mention it. Did you know that Bitcoin, dumbest thing. I mean, great concept. I like blockchain. Just hate Bitcoin. The value is now over $1 trillion. If I was Elon Musk and I put $1.5 billion into it, I'd be cashing out and taking advantage of all the dummies who bid it up to $57,000. This is insane. This stuff just gets nuts. It's more nuts than GameStop, I think, even, which, by the way, is now down to $40. All righty, let's see. Bob, you're up next. Welcome to Talking Real Money.
Hi, Don. How are you doing?
Good. Thanks, Bob. Thanks for calling.
Yeah, question I have. I'm in a deferred compensation plan, for similar to a 401k with no matching funds, and I've been doing this for a number of years. With the stock market, I have been split into large cap, small cap, and global equity index fund. And I've had quite a few gains recently. It's up to basically $1 million. And my question for you is, with the current market, should I diversify some of the existing funds or should I start making my future contributions into something different, or do I ride out the storm? I mean, with that type of a dollar figure, I'm basically wanting to find out if if I need to protect those assets, and if so, how.
I understand. Boy, when you get to that kind of number, you're going, oh, it feels really good to have all this. I don't want to lose any of it. But
Correct.
The fact of the matter is that's the market does that. It giveth and taketh away, but giveth, or it has giveneth more than it's takeneth away, which were really bad words. How old are you, Bob?
I'll be 60 this month.
Okay. And when do you plan to start using this money?
Well, I'm going to retire in the next 2 to 5 years. Financially, I wouldn't have to start drawing on it immediately. Maybe I don't know if it'll be, when I retire, or if I'll wait till 7 years.
But it will be sometime in the next decade that you're going to start drawing money from this.
Yes, sir.
Okay. See, now we can talk about diversifying for the right reason, which is risk reduction. And I'm a big believer in that. So right now, 100% of your money is in the stock market, correct?
In that fund, correct.
Well, what does the rest of your portfolio look like outside of that? Round figures.
I have about $400,000 in, basically in a Schwab account, with half of that being, half or a little more of that being Roth, regular, and diversified stocks.
Okay, so is most of that money in stocks too?
Yeah, my advisor has some cash in it for liquidation. He's got it diversified
for liquidity, sure. But no. I'm talking about cash, not cash, but fixed income for one purpose only, and that is stability addition. It's to add overall stability to the portfolio. What I would do in your deferred comp plan is now, because you're 100% there, over the next probably year or two, find a good short intermediate bond fund or a bond market index fund that's high quality bonds, and start investing in that. I know you're not going to make any money on it. You might even lose money, but it's going to add overall stability eventually.
Tom and Don are talking real money.
A second opinion could save your life either physically or fiscally. Let one of our Vestory advisors help you save your future at Vestory.com, Vestory.com.
For your real life and real future, Tom and Don are talking real money.
And Bob, if you're listening, one other thing you really ought to do, go to TalkingRealMoney.com and take our risk quiz. Determine what your risk tolerance is, because that's going to tell you how aggressive your portfolio ought to be going forward, because right now your portfolio is pretty darn aggressive. And this is a generalization, but somebody who is in their early 60s and plans to start using money within the next 5 to 10 years generally wants to have a portfolio, and again, broad generalization, that has between 20 and 40% in bonds. High quality, shorter to intermediate term bonds, not long-term bonds. They're too risky. There's too much volatility. And again, when people say, well, why bonds? I saw this question a lot at retirement. Why bonds? Bonds aren't paying anything. That's not why we get them. We get them because they don't fluctuate as much. Yes, they can go down a little and up a little, probably down more than up, but it's only a little. You see, they can't go down a lot when they're of short to intermediate maturity, because the bonds mature out of a mutual fund. That's why we want you to do it in a mutual fund. Should have said that. Got to be in a mutual fund, because the bonds mature out and they are replaced by new higher yielding bonds, which raises the yield to whatever the current market's like. So you might lose a little principal and then gain it back in some interest. But the point is not to get either one. It's just to keep the entire portfolio from looking so crazy. And that's one of the big keys to investing, is to make sure you look at your portfolio as one entity, not as its individual pieces and parts. You start looking at the individual pieces and you get caught up in their fluctuation. And they're going to fluctuate. The point is to have all these different assets that don't move at the exact same time. All the time. Sometimes they will. They will. But then they kind of diverge. And we've got numbers to back all that up. We had it in the class. We'll keep sharing those numbers with you, too. 855-935-TALK is our phone number, 855-935-8255. You know, there are times, have you ever had one of those moments where you go, oh, I should have done that. That was just an idea waiting to be tried. Well, you know, a few years ago when cryptocurrencies were hot, I wish I had come up with something like, and I could have probably even named it this, dumb coin. Hey, let's get some dumb coin. You can get dumb coin, and, you know, we're going to make 1 billion dumb coins. And we're going to say they're worth 1/100th of 1%. Of 1 cent, I should say. They're worth almost nothing. You get 1 billion of them, and you got like $100. I'll put 100 in. So we're going to say they're worth that. Yeah. And then people start getting excited about cryptos, and they bid up Bitcoin from nothing to thousands, and they bid up Ethereum from nothing to a couple of thousand, Ripple and all the others, Stellar. But along the way, they also bid up dumb coin. Now, if you don't think that's a possibility, that people wouldn't buy my dumb coin, well, then you haven't paid much attention to Dogecoin. Dogecoin was literally started as a joke. It's named after the guy's Shiba dog. And it was a joke. He had some computer skills, and he set up a blockchain network and put Dogecoin on it. And yeah, you can mine Dogecoin. Can't use it for much of anything, but you can mine it. And you can buy it. Yes, you too can buy Dogecoin. Can't do anything with it, but you can buy it. And with the run up in Bitcoin to 57,000, I decided to check Dogecoin. I haven't checked it in a couple of weeks. Dogecoin, which were literally tiny fractions of a penny, are now up to a whopping 6 cents a Dogecoin. Now, this is a joke. It is a humorous cryptocurrency, but I wish I had started it, because I would own my own radio network. Because right now, all the little dojis out there are worth $7.3 billion. So all you dumb dojis bid up Dogecoin to a multi-billion-dollar fake joke asset. I find it hard to believe, and yet I guess I'm kind of kicking myself for not creating a dumb coin. But it shows you, this illustrates so clearly why playing the market is foolish. Playing any part of it is foolish. Trying to get rich quickly, yeah, it works every once in a while for someone like the Dogecoin creator, or for people who got into Bitcoin earlier. And then, have you ever noticed that Bitcoin people, Ethereum people, Stellar people, Ripple people, they are good at one thing: evangelizing. They get media attention, and they have followers, and they have acolytes and believers, rabid believers, people who will buy into this, who think that they're on the cutting edge of something that is going to actually matter. And I want to go back to blockchain. Blockchain matters. Blockchain has the potential to make financial transactions secure and incredibly easy. But because of its simplicity and its sensibility, it is much more likely that you and I will transact business in blockchain dollars or blockchain euro than in blockchain Bitcoin. Because the same argument, I mean, they're saying it's a finite resource, but is it? Yeah, you can still mine it and get more, but there will be a limit to them. But that's like saying, what would have happened to the world? And I don't think anybody really thinks this out clearly. What would have happened to the world if there was only X amount of gold in it? There was only a tiny bit of gold. Well, a few people, like, I don't know, Elon Musk, they could control, and there was no other currency, no fiat currency, just gold. A few people could control the wealth of the world, and you think it's bad now? Can you imagine if it's hundreds or thousands of people who controlled all the wealth in the world? How miserable the lives of everyone else would be? This is all silly stuff. Don't get into it.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. Are we done now?